everybody. I'm hoping you're having a great week in the second spring. Yes, it is second spring in the great state of Idaho. Third spring will come in a couple weeks after it snows again. I've got 3 great items, 3 brand new things for you, and 1 that's kind of challenged. So let's talk about the VA first. On Tuesday, the VA came out and actually reduced their upfront funding fee. So the VA typically on a first-time use, first-time home buyer, the funding fee was 2.30%. So that 2.30% was tacked on to the loan amount. But the VA doesn't have a monthly mortgage insurance. Now that funding fees actually went down to 2.15%. So pretty spectacular. And then below that, if a veteran puts 5% down, or if a veteran puts 10% down, those funding fees went down also. And I'll have those up on the screen here. The next thing is on Wednesday, FHA also adjusted their mortgage insurance. Now, their upfront funding fee, which is their upfront mortgage insurance, which gets tacked on the loan, did not change. It's still 1.75%. But what they did is they adjusted the monthly mortgage insurance down. So it was 0.85%. And how you calculate that is you take 0.85, multiply by the loan amount, divide by 12. That's pretty much what your monthly mortgage insurance was. But now it went down to 0.50. So this is huge, or 0.55, excuse me. This is huge because this is 30 basis points. So basically, it's like taking 30 basis points off the interest rate in theory. What this is going to do is this is going to allow more people to go into the FHA program because the rates are usually less on FHA. Now mortgage insurance is less on the FHA than it is conventional. And it's going to give the buyers a little bit more buying power. So that is super good news. Second of all, that happened on Monday, Idaho Housing released their bond program for conventional. Now, they originally released about a month ago their bond program for their FHA program. Now they've released the bond program for their conventional. And as of today, right now, Idaho Housing's regular loan amount is 6.625, but on the bond program, the interest rate is 6.00. This is a pretty nice little program. Now, there are some caveats to it. Obviously, you can never, ever, ever, ever turn this into a rental property, and there are some income restrictions, and there are some geographical restrictions. But for the most part, this is a pretty good program. So that was 3 great news that came out this week. Now let's go to the more challenging stuff. Fannie Mae came out, as Freddie Mac did a month ago, and said that if you purchase a home or you refinance a home, a rate and term refinance, you have to wait 12 months from the date of the note before you can do a cash out refinance. So if somebody got into a house and they wanted to cash out some equity, say 6 or 8 months down the road, in order to, maybe fix it up, they can't do it. So that's super, super challenging on that one. And that goes for any cash out refinance, whether it's primary, secondary, or investment. So kind of some challenging news there. And rates went to poop this week. I'm just going to go from there. Hopefully unemployment numbers on next Friday come out favorable to rates, and then consumer price index comes out favorable to rates in March. Or we're probably going to see the 7% interest rates by either late today, or if nothing happens, over the weekend on Monday. Hey, with that little tidbit of information, I hope you guys all have a great and wonderful weekend. Thank you very much, and have a great day.